Hi everyone, and welcome back to the channel. Today I'm going back to my roots from 2020 when I bought Palantir a few days after they went public, and I think I had around $12-ish. I've been selling covered calls on it for the last few years, and for this video I'm just going to break down the good, the bad, and the complicated. So basically, what is Palantir? Is it worth the hype, and should you buy? Please thumbs up and subscribe to the channel for more Canadian finance videos and a little bit of me ranting about real estate. Palantir went public in September 2020 for around $10 US. The stock has had a roller coaster during the meme stock phase. It hit $40 and then it dropped to single digits for a few years. Actually, until recently, I think in the last year or so, it was up around 379%. I'll put an image of it somewhere. I didn't really make any videos of it in 2022 or 2023 just because the stock was mainly down like 25% for me, and I thought it was a dud, and I thought it would stay down forever. But I'm a buy and hold type of guy, and I was selling covered calls on it. I'm a little bitter when I have these big losses, so I just kind of held. But it's coming back now, and I'm just making a little video doing an update on it, and should you buy? Palantir is a data and AI company. They have 4 similar but different products that they're offering. They have AIP, Foundry, Gotham, and Apollo. I've only used Apollo, and I didn't actually know it was a Palantir product until recently. The company is a little controversial, mainly because it's used by the government, heavily by the US government. 60% of the revenue is government related, and it's mainly the military part of the government, even though they kind of hide this part, but everyone's saying, hey, people use this company for data to kill other people, which is the dark side of it. And the reason for their rapid growth recently is the government's rapid spending, or their forecasted increased spending. You can see that directly in their Q3 2024 results. This is an excerpt from their website. Their earnings are in 2 weeks, like the annual 2024, and I'll do a follow-up if people want. Revenue for the third quarter of 2024, $725 million, which is up 30% from the Q3 2023, which is amazing growth, 30% in a year. And not only was this unexpected for the public, like shareholders, but it was unexpected for the company as well, since they had to increase their overall guidance and estimate for 2024, and causing the stock to jump more, probably more than it should have. People are buying or pumping the stock mainly just based on hype. It's not exactly worth $179 billion yet. The price to earnings ratio is currently 399. Let me just round it to an even 400. This means at today's earnings, it would take you 400 years to break even if you owned 100% of the company. If you paid $179 billion, it would take you 400 years just to get your money back. It sounds reasonable, right? The issue is these tech stocks, or like new companies, are usually priced based on future growth or future earnings. So it should be PEG ratio. So the earnings growth number would be a lot lower. However, if I were to price this at 50 times their future income, it still takes 50 years to break even. Just for comparison, a more reasonable number is 25 for a tech stock. We can see that with Google. I believe their PE ratio is around 24. I'll throw up the Alphabet stock. The income from operations is 113 million. However, for a growing company, I'm not as interested in the income yet. There's a lot of like accounting standards and non-cash items or workarounds that make this number useless sometimes. I'm more interested in cash flow from operations. You can see, like, can the company produce cash from their base products? And the answer is yes, a very healthy 419 million. They even have a better metric, which is free cash flow of 430 million. If you want, you can run some basic metrics by eyeballing it, like the current ratio. Do they have enough cash in the short term to cover their short-term debt? They're currently at a 5.5 coverage. Is that healthy? I actually don't know if it's healthy. Like, I just want at least 1.0, which is like the bare minimum I'd expect from a company. Can you pay your short-term debt, which is a 1.0? So just doing basic analysis and market expectations, is Palantir buy, sell, or hold? We can briefly summarize the positives. High growth potential, positive long-term growth with the US government increasing their spending, strong client base. The US government seemingly have an unlimited spending budget. And also they're growing their commercial or B2B side as well. And lastly, profitability. They have huge profit margins, and they actually recently became profitable on their bottom line, which is a good sign for a new and heavily growing company. They're spending a lot in R&D, so it's good to see that. The risks include it's a volatile stock. It's currently not worth the valuation, and I don't think it will be worth the valuations within 5 years if we take into account their growth. They're heavily reliant on government contracts. I don't know why this would happen, but if they lose the government services, there goes 60% of their business. And lastly, it's a very competitive space. Since the US politicians are just easily bought, I can easily, I'm saying easily too many times, I can easily see a few folks taking a bribe here and there, or like donations, and switching companies. Okay, you know what, another note I'll add, I'll put up an image of the stock-based compensation. The stock-based comp is worrying. The directors or employees are walking away with $409 million in stock-based compensation just in the first 9 months of 2024 alone. And that's on top of the $343 million of stock-based comp in the first 9 months of 2023. So long story short, or long story long, I see the stock going down before it goes up. I'm currently holding, I think I have 900 shares at around $12, and I'm holding for the long term. Currently, I'm up, I think, from $12 to $72. I'll try to put an image of my portfolio from a recent video I made. I have around $65,000 CAD in Palantir, and I think I would hold or buy this stock. I wouldn't sell. This is not a sell, it's a hold or a buy. And, okay, so this is why. This guy thinks he's smarter than the market. He sold at 40, waiting until it's 30 to rebuy. It's funny, like, don't try to outsmart the market. A stock can stay overvalued or irrational longer than you think it should. And now it's doubled since he sold, and he wants $30. So he wants a 60% price drop before he can buy again. Before, he wanted a 20% price drop. I would stop. I wouldn't try to play around or time or day trade the market like he's doing. That's all for today. Thanks for watching, and tune into the next one.